Hi, I'm Lango, and this is InvestorPlace Quick Picks, where we communicate to you some of the market's best investment ideas in just 5 minutes. Today, we're going to be talking about an online gambling stock named DraftKings, ticker DKNG. Now, DraftKings stock has been one of the hottest stocks of 2020 because the market is absolutely convinced that the gambling and casino industry is going to be digitized over the next 10 to 15 years. And DraftKings, as one of the large early stage players in this space, has turned into the market's favorite way to play the online casino megatrend. So DraftKings stock, from its NASDAQ uplisting, has risen more than 200%. And guess what? This optimism is not misplaced. The gambling, casino, sports betting, slots, that whole industry, yes, it is going to be digitized. And DraftKings, as an early leader that can lean into network effects, will remain a huge player in the space. Now, DraftKings stock, it's down about 30% over the past 2 weeks. Against this big picture backdrop, this sell-off, nothing more than a buying opportunity. So get greedy while others are fearful, buy the dip around 40, and hold for the long haul. This name has tremendous upside potential. Now, DraftKings stock is a long-term winner that belongs in every growth investor's portfolio, and it's really not hard to see why. When you look at the global gambling industry, you have a $450 billion industry, so massive. That's supported by steady demand. Consumers love to gamble. Some, you may even say, are addicted to gambling. It's been steadily growing for several years and will continue to steadily grow for the next several years. So by 2025, 2030, you're talking a $500, $600 billion industry. Now, this industry is mostly in the physical realm today, but you are starting to see an increasing share move online from about 9% in 2015 online gambling to about 12.5%, 13% in 2019. This shift is happening because we live in an era where if it can be digitized without loss of quality, then it will be digitized because digitization offers superior convenience, superior access, all that stuff. And yes, when you look at slots, when you look at poker, blackjack, table games, roulette, sports betting, those are experiences which can be easily digitized without a loss of quality. You can play it on your computer and it almost feels the exact same as playing it in a casino. There's not much loss of quality, and because of that, you're starting to see this industry be digitized. Now, assisting this transformation towards online gambling is the overturning of PAPSA in 2018. The US Supreme Court overturned that, and since then 14 states have legalized online sports betting. That's huge. So the laws are changing to support basically national and legal online sports betting. You're having shifting demand because consumers are becoming more and more open and warm to the idea of placing bets online, of doing what they do in a casino on a computer. And you have shifting supply, right? COVID-19 came through and shut down all of Vegas, all of Atlantic City. The casinos didn't operate. These casino operators, in order to keep the money going, needed to and continue to want to build out larger online platforms. So you have all these drivers converging with the secular trend. The end result, the gambling and casino industry is going to be massively digitized over the next decade, and that's great news for DraftKings. Now, when it comes to the sports vertical of this online gambling industry, DraftKings is the unrivaled king. They have over 500,000 monthly active players. They have over 12 million registered accounts. They are just head and shoulders above everybody else. Now, importantly, this first mover's advantage actually gives DraftKings enduring competitive advantages to sustain market leadership as this market grows and grows and grows and grows and grows. Those competitive advantages are branding, right? So when you think of online sports betting, of daily fantasy sports, you think of DraftKings. So if you're interested in doing it and you're a first-time person, first-time entrant into the market, you're gonna download DraftKings app. You're gonna go to DraftKings.com. You're gonna do it through a name and brand that you trust and recognize. You also have network effects built in there, right? DFS especially is inherently social. You wanna do it with your friends. You wanna do it with the community. DraftKings has the largest community. Chances are some of your friends are already on it. So when you go to do DFS, you're gonna wanna do it where the community and the social activity is most robust, and that is on DraftKings. You also have a data advantage. DraftKings is a very data-driven organization. Everything they do on the back end is based on data they get from their consumers, how they're using it, their gambling habits to improve and iterate the platform, improve and iterate the consumer experience. So the more data they have, the better the platform is gonna get. That's a positive growth flywheel. And then on top of all of that, you have bigger winnings, right? Why do we do this stuff? Why do we do DFS? Why do we place online sports bets? To get more money. DraftKings is the biggest platform out there. They can have larger prize pools than everybody else. That is a huge, huge competitive advantage. So because of its first mover advantage, DraftKings has enduring competitive advantages, which will allow the company to sustain market leadership in the booming global daily fantasy sports and online sports betting market for the foreseeable future. And to that end, DraftKings stock, long-term winner. Now, DraftKings stock has come under a lot of pressure recently, as I said, down 30% in the past 2 weeks. But this sell-off has nothing to do with the fundamentals. If anything, DraftKings business momentum is as robust as ever. The company has signed exclusive sportsbook and daily fantasy sports agreements with some of the largest sports media platforms in the world, including Turner Sports, so that includes Bleacher Report, including ESPN, that one is massive. They've also signed similar deals with teams like the New York Giants, the Philadelphia Eagles, the Chicago Cubs. So if anything, DraftKings has as robust of business momentum today as they have ever had. So this sell-off has nothing to do with the fundamentals. Rather, it has everything to do with valuation and technicals. Fortunately, both of those things are starting to turn around. Now, according to my numbers, which make some pretty basic assumptions, I assume that the global gambling industry continues to grow at a very modest 2% pace over the next several years. That industry gets massively digitized over the next several years too. DraftKings becomes the biggest 400-pound gorilla in the sports betting and DFS verticals of that online gambling world, and has some but very small market share in the online poker games, online blackjack, the traditional casino stuff that gets digitized. Under those assumptions, I think DraftKings is worth about $40 today, just above $40. So when the stock shot up above 60, it was way overvalued. The valuation was way overstretched. But now that it's come down to 40, well, it's fairly valued again. And that means this valuation headwind, it's gone. So it's safe to buy the dip. Now, at the same time, this sell-off has, because DraftKings was so hot, this sell-off has yet to hit any technical support. But that technical support will show up at the $40 level, which is where DraftKings 100-day moving average is. And given how good the fundamentals are, how promising the long-term growth trajectory is, how attractive the valuation is now, and how strong the business is operating at the current moment, I see no reason why DraftKings stock won't hold that $40 level. So, with all that in mind, the takeaway is simple. Buy DraftKings stock at 40 bucks and hold for the next several years. Well, that's all we have for this edition of InvestorPlace Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, smash the like button, or if you'd like to read, come over and visit us at InvestorPlace.com, and we have some of the market's best analysis. Until next time, cheers and happy investing to all.